Have you ever wondered why two houses look the same and one happens to double in value and the other doesn't? The answer is simple. Location decides everything. In real estate, location drives 80% of value. Strong schools, jobs, population growth, and access to amenities all influence demand. A property in a thriving neighborhood appreciates faster and rents easier. No matter how old the house is, you always have to consider location. Even small shifts like being near new infrastructure, a tech hub, a university, can change property's entire future. You can remodel a kitchen, add a deck, upgrade a roof, but you can't move the land. So location is key. So before you buy, study local data, look for migration trends, employment growth, and city investment plans. That's how professionals build wealth, not luck, but location. Second golden rule we're going to talk about is cash flow first. If your property doesn't pay you every month, it's not an investment, it's a liability. Cash flow is your financial foundation. It's the money left after you pay your mortgage, insurance, maintenance, and everything else. Positive cash flow means your property pays for itself and produces profit every month. Never rely on future appreciation to justify a bad deal. Markets shift, but consistent rental income gives you flexibility and security. A great rule of thumb, if it doesn't have cash flow from day one, walk away. Successful investors don't chase shiny objects, they chase returns. And those returns are always backed by the numbers. Rule 3, buy below market value. If you want to know when you really are going to make money in real estate, it's not when you sell, it's when you buy. Buying below market value is how investors create instant equity. Look for motivated sellers, off-market deals, and properties that need light renovation. That discount protects you from downturns and boosts long-term returns. It's simple math. You can buy a $250,000 home for $200,000 and you just made $50,000 in equity. Before doing anything else, always run the numbers. That's smart investing. And remember, patience beats pressure. Wait for the right deal, not just any deal. Golden rule number 4 is know your numbers. Real estate rewards math, not emotion. The numbers tell you everything. Before you invest, know your ROI, cap rate, and cash-on-cash return. These metrics show whether a property fits your goals. Cap rate tells you your return if you paid cash. Cash-on-cash shows your return based on the money you've actually invested. And ROI captures total profitability over time. Successful investors analyze deals with precision because numbers don't lie, but excitement can. I always heard measure twice, cut once. So run your numbers, a second time, make sure everything's the way you want it. Golden rule number 5, leverage wisely. Leverage can build empires or break them. The key is how you use it. Leverage lets you control big assets with smaller capital. A 20% down payment on a $300,000 property means you control $300K with $60K. That magnifies gains, but also risk. Also keep reserves for repairs and vacancies. Don't stretch debt too far. Smart leverage balances opportunity with safety. Used wisely, it is the fastest way to scale your portfolio. Used poorly, it's how investors lose everything. And finally, we got rule number 6. It is think long term. And it's a very important one. You never want to be short-sighted. You want to see the big picture, hit your quotas, month after month, and you'll be on the right trajectory over time. If you want to know the real secret to wealth, they don't flip, they hold. Real estate rewards patience. Long-term owners benefit from appreciation, rent growth, and tax advantages, and compounding equity. Even modest yearly growth builds massive wealth over time. Short-term speculation can win fast, but long-term ownership wins big. Stay disciplined, reinvest cash flow, and let time do the rest. Wealth in real estate isn't built overnight, it's built over decades. I appreciate everyone watching this video this week. If you have any questions on any of these rules, feel free to ask in the comments below. I'll be more than happy to answer. If you want to, go ahead and make a comment on which rule was most important, and I'd really appreciate hearing back from everyone. If you like this YouTube video, please hit the like and subscribe. We'll make another YouTube video next week, having more smart investing real estate tips. So be sure to check back next week. We'll have a couple more, as well as some YouTube shorts uploaded. Appreciate everyone watching, and I hope everyone has a very profitable week.